required.
Al Fullerton from Aliom Financials with me in studio. Al, what's your assessment of the Australian economy right now? We can talk about the political uncertainty, etc., but the fundamentals are there. What do you think they are?
No, they are. And we're seeing positive news flow coming through, be it job ads, be it the reiteration of our credit rating. So it all bodes very well for the Australian economy there. Unfortunately, we have the headwinds coming in from offshore, from the US, and following last night's European session, concerns over the health again of their banking sector. So I think obviously we're in a very healthy position there. Geographically, we're well located to export our resources to China. But I think the light's going to perhaps be on the banking sector somewhat over the coming 1 to 2 months, I'd say.
Yeah, well, globally there's concerns about the health of the US and the European banks, and that impacts wholesale funding, of course, for the Australian banks. How soon, you touched on this earlier, but I think it's an interesting point.
Yes.
How soon do you think we might actually see the banks come out and raise those variable mortgage rates?
Look, I think it's quite an opportune time to do it in the near term, perhaps over the coming month. I think that the banks haven't really been in the spotlight over the whole political the election period. It's been more focus on the resource space and the national broadband network. I think in light of last night's comments from the Wall Street Journal about the European banking sector, perhaps some potential issues there in terms of their exposure to some sovereign debt, and they might not have been as transparent as they should have been. And also obviously coming up with the Basel Committee announcing or rumours that they may increase Tier 1 ratios from 4% up to 9%, which is going to cause serious liquidity constraints up there. So therefore our offshore access to funds is obviously squeezed in. So I think there are some real potential headwinds there, uncertainty in the US being another one. So it perhaps is the right time to look at a move outside of an RBA move by the banks. And again, following from yesterday's RBA meeting, it certainly has come to light that they're going to be looking at any potential rate rises over as a month-by-month basis, and there is no real no real reason why that 1 month it could change the next, and a rate rise could be on the cards relatively quickly. So
presumably the RBA would be watching for what the banks did as well then.
Yeah, that's right, and they'll be looking at obviously the inflationary side and the CPI data and whatnot. But I think that certainly the banks, it may be the right time. I think certainly, as I mentioned before, CBA and Westpac are the two who certainly gain to benefit the most from an increase in the mortgage rates there, and I think that certainly it could be one of those two who would act first.
Does that brighten the prospects of those two particular stocks then, if they were to come out and raise the variable rates?
Oh, look, I think it certainly would be a negative from the consumer point of view, but from a shareholder point of view, they'd be happy. I'm sure half the shareholders have home loans as well. So look, it will be they're well capitalised. We know our banks are in a healthy financial position. Their Tier 1 ratios are very healthy. It's more the fact that there are funding constraints, and there doesn't seem to be any near-term catalyst to alleviate those.
All right, Al, let's take one more break. Let's return to Al from Aliom Financial Markets, and all of this and the concerns about Europe just back in focus and in the spotlight again, Al.
Yes.
And it's just got that bearish tone that we hope won't last too long. We've been through it too much, I think. But what are you saying to investors?
There's austerity measures too as well, which are interesting. I mean, we knew that these serious austerity measures in the European economies were going to have some serious backlashes, and we've seen that. And I think that's something to watch as well in the US in terms of some of these measures that they're talking about over there, which are things like retirement and or bring forced retirement so that the younger age groups can start getting jobs, and some of these sort of Great Depression style measures which have been discussed as possibilities as well. So it's a really interesting time both in the US to handle that correctly, and now back over in London and in Europe, how they're going to actually handle the backlash from the public in terms of trying to get their economies out of this.
Exactly, and with that kind of backdrop, when's the time for people who are long cash to be moving money back into markets?
Yeah, $1 million question, that one. Look, it certainly is a time when we're following on from reporting season, both in the US and Australia. We've seen the health of the companies. As we spoke about during reporting season, it's right to be proactive rather than reactive. Wait for the companies to come out and report, make your decision then based on them going forward. We've seen companies such as Computershare sold heavily down following on from a bit of a nervous outlook and a cautious outlook, and not hitting guidance, and then they've run back 8% since their 11% down fall. So there has been opportunities to buy and really take profit, and that's what we're really, with our client base really looking at doing is locking in those profits taking the gains there, because in this market it can just turn around on the dime and go back down. And now that we crossed the 200-day moving average and we're now back down below it, are we going to continue to see the market trend downwards, back down towards that 4,300 level? The market's been range trading for so long. So it certainly is a time to lock in profits. Certainly a time now that we have all the information that we really need from the companies to make an educated decision going forward. Also, there's quite a bit of activity, or certainly increasing activity in the IPO space. In the US, we've seen a horrendous backlog, 161 companies awaiting their float there. And in Australia, we're seeing a number of companies that are looking at listing. And I think the energy sector is quite an interesting sector to look at. There's a lot of comments that is it the right time for an IPO, and I think the energy sector is a very interesting place to look at for the IPOs. I think we're seeing this ongoing demand from the emerging economies. And we've certainly seen, Zebek talking about they're looking at the 9% growth in some of these places, and the energy demands being there. So one company there is Otway Energy. Otway Energy, the books close at the 22nd of September.
Which you guys are involved with.
Which we're looking at, that's right, and we certainly have a number of our clients are in that. They're a gas company down in South Australia there, and they're actually, the infrastructure's in place, and what they're doing is just purely drilling there. The demand's already there. They'll be tapping into Adelaide and the eastern seaboard, and so there's a really interesting IPO, and it's a right time for this company in the energy sector to be looking at raising the capital and floating.
Except the most recent IPOs have been nothing short of, well, you'd have to say disastrous. I mean, is the IPO market back yet? It just doesn't seem.
Sure. No, I think there has been a number of the smaller caps, and this is a small cap company that have actually gone through quite successfully as well. There have been obviously some which have been maybe in the higher profile ones, which are the ones you read about more. I think it's certainly, as I said, it's the energy sector. It's the right time for the company because they're ready to go. They're raising capital to put the drill in the ground. They've done the 3D seismic surveys. They've located the gas. It's now the time to drill and confirm the wells are well and truly what they are hoping for. So again, I think if you're looking at and you're long cash, there are a number of IPOs. Have a look there, and the energy sector is certainly one that I continue to reiterate. I think it's an appropriate time. And be the market was running or was pulling back, it's still the appropriate time because the demand is there. It's a domestic demand they'll be supplying down the Otway Basin in South Australia. So I really think that's certainly a sector to keep your eye on there.
Yeah, you've always liked that sector, I know that. Yes. Thank you so much. Great to have you on the program today, Al.
Thank you, Brooke.
Much appreciated. Al Fullerton from Aliom Financial Markets. That's pretty